Fed Chairman Jerome Powell, speaking alongside Christine Lagarde at an ECB policy forum in Portugal, admitted, certainly there's a risk that monetary policy will hurt the economy, but that ain't necessarily so. Do his colleagues agree? We'll discuss. According to the St. Louis Fed, the Sahm recession indicator signals the start of a recession when the 3-month moving average of the national unemployment rate rises by 0.5 percentage points or more relative to its low during the previous 12 months. The most recent U3 was 3.6%, and for perspective, that's low. In fact, the lowest unemployment recorded since 1970, over 50 years, was 3.5% in September of 2019. So if inflation is rising, but unemployment is so low, what's the worry here? In the June summary of economic projections, 7 of 18 members of the FOMC are forecasting 4 to 4.1% unemployment, levels which are either close to or actually touch the Sahm Rule threshold. Whether FOMC members' forecasts are particularly prescient is another matter. As we look, for example, at their forecast for PCE, their preferred measure of inflation, what we see is that, if anything, they're a lagging indicator. Moreover, it would be entirely uncharacteristic for policymakers to admit that correcting earlier policy mistakes may actually involve some pain for the rest of us. However, it seems some are willing to imply as much by suggesting the Sahm Rule will be triggered. And the Sahm Rule has correctly called the beginning of every recession for 3/4 of a century. With that cheery bit of data out of the way, I would like to say, welcome back, Carter. How are you?
I'm good. Yeah, that was all very somber stuff.
Well, we got a couple questions actually from viewers, and I thought we might start off by trying to answer them. And I think the first one was looking for your view, Carter, on Salesforce CRM. What does it say here? All-star duo would love to get your thoughts on CRM when you have the bandwidth, with a PE multiple above 150. Look out below. Either way, keep up the great work, Professor Coe and Carter.
Well, I think look out below is as good let's say, an interpretation of the circumstance at hand than any. I thought we'd look at a long-term chart. So this picks up the company from the 09 low. It's log scale, and obviously you see something going from essentially $6 to 300 and change. But let's put some trend lines on. What we see here is a clear break in trend. In fact, we have had a second touch point sort of 2-3 years ago, and then we have this crack through again. And down 50% from its peak, it doesn't mean anything. It can go down 55 or 65. I think it is exactly that. Look out below.
Yeah, I'm inclined to agree. The thing about Salesforce is that, at a pro forma level, their operating results really are quite remarkable. But when we start taking a look at GAAP earnings, when we start accounting for equity compensation, the actual earnings, and I think this person asking the question captures this, is that the real earnings actually are quite stagnant. When we take a look at analyst estimates, they pretty much match the pro forma number, not the real number that shareholders are actually entitled to. Now, I don't think we actually have this one captured, but another question that we got was on Amazon. Carter, what's your view there?
Yeah, now Amazon, and I thought we could kind of draw the lines the same way. Amazon also, now I've done different time frames here, but I think it'll be relevant. This is a 10-year chart, and you can see, of course, the touch point there in 15. You see the COVID low, and then the break-in trend. Now one could say, okay, so break-in trend, but where has it gone to? Well, you see here in the second iteration, it's down to support. So if we were to go back and forth, you kind of toggle, you can see that the break-in trend is real, but the stock is already down to support. So a third chart combines those two, and I think this is a pair of twos, meaning it is at support, it is finding support, and whereas Salesforce looks like it has another down leg, I think Amazon does not. Let's do this same thing longer term. Now take a look at the trend line. It's remarkable. That's from the 09 low. It literally touched to the penny in 2014-15, touched to the penny COVID, and then we broke trend. But again, if we put the support line in, now put them all together, whereas one would think this has more to go, I think we're down to support, we're finding support. It doesn't make it a great bounce candidate because notice it's not bouncing, it's just doing the first thing, which is stopping going down. It's the kind of thing where I might bet against volatility.
This is really an interesting case because, fundamentals often explain price action, not the other way around. But I actually think that there is a fundamental case that sort of supports what you're seeing technically, and it works this way. For one thing, we've got AWS, which is a phenomenal cash flow generating and rapidly growing business. They're best in class, best in space, probably a $750 billion business on a standalone basis. But another really interesting thing to me about Amazon is that this is a company that was actually losing money on what was originally their primary business, which is essentially retail sales, during one of the best and most remarkable periods for retail that we've seen. The thing is, that's the period that was. The period that is for retail is looking a lot worse. I think we saw some signs of that. It's obviously a specialty retailer in Bed Bath & Beyond today. That's a company that's almost looking doomed to failure the way things are shaking out right now. But that probably supports your technical view on Amazon when we think about how retail is faring now. Would you agree that retail is looking pretty weak?
Very weak, and apparently the data that's coming out is ominous. As one portfolio manager said to me long ago and reiterated not long ago, he said that the whole country is overstored, meaning there's all these storefronts that you don't need, whether it's Urban Outfitters or Gap, and it goes on, and just they're gonna shrink, they're gonna go away, they're gonna basically get right sized. It's just too much of this stuff, all doing the same thing.
So, obviously the sales number sequentially from Bed Bath & Beyond didn't look very good. The stock was punished. Another stock that got punished today, not in retail, but maybe a little bit of a bellwether for the economy more generally, was PAYX. This stock got hit harder than the market did today. What are your views post earnings on this one?
Right, so a very heavy volume drop in gap today. But what's important is this has been struggling for a while. And so you see here in this chart, it basically has a double top, which is to say the uptrend really ended quite some time ago. And while it tried to continue, it didn't continue. Instead of continuing, it made a double top. That's one way to draw the lines. If we put in the 150-day moving average, what's important here is once you're below it, notice on those ricochets, those bounces, those recoveries, they keep failing at the 150-day, which then becomes a level of overhead supply, a difficult level. And if you keep the same time frame and put the trend line in, notice where once breaking trend, it throws back and hits the trend line, the underside of it, and fails. So combine them all. Both the trend line and the 150-day average in the final iteration are at the exact same point. It's not a good setup. It's a big winner off the lows of COVID that can unwind more.
And that also seems to be consistent with actually how we began this conversation with the Sahm Rule and the forecast that some of the FOMC committee members are making about unemployment trends over the course of the next 12 months. Another stock that got very hard hit today was Carnival Cruise Lines, although I was looking at one of the others, Royal Caribbean. This was a name that saw some very heavy bearish put activity today. We saw a purchase of over 11,000 September puts in Royal Caribbean, and this is a space that has already been exceptionally hard hit. What are your thoughts, Carter? Do you think there's more downside? It seems like there are some options traders who think that the sinking will continue.
I'd go with that view. As they say, I concur, meaning this is heavy. And there's an old-time technical expression which is controversial for the fundamental community. It's someone would say, for instance, I would say, RCL acts poorly. And people say, well, what do you mean? You've personified the stock? You say gold acts poorly, or this acts. But people get it in sports when a pitcher comes in and he throws a few pitches, that right away, get him out. He shouldn't have done that. Something's off. It is just that. The stock acts poorly. Stay away from it.
Yeah, I'm inclined to agree with you there. Okay, that's all that we have time for today. If you like this kind of content, please let us know by hitting that like button. And if you have questions, as you can see, we'd be happy to try to answer them. Put them in the comment section below and hit that notification bell and subscribe. Thanks for watching.